During my time in crypto, I have seen thousands of people lose their whole life savings like this. They went from having an above average life to live in absolute misery just because they listened to a guy online who said buy this meme coin or invest in this low cap project that's going to change the world and it's going to flip Bitcoin over. So for the sake of our precious life and little time we have on earth, please watch this video till the end, since I'm going to talk about 7 deadly mistakes beginner traders make on their trading journey so you don't make them and survive in this crazy volatile market. Hi, my name is Rohan Rad and I'm your host at The Crypto Forecast. It breaks my heart to talk about this specific topic, but I think awareness is the only way to prevent consequences. Now let's talk about these 7 mistakes. The first common fatal error I see many unsuccessful traders make is lack of risk management. Investing in any market, whether it's stocks, commodities, forex or crypto, comes with inherent risk. You have to create a new mindset for yourself, and instead of focusing on potential profit, you must consider every possible way you might lose money first. This way you can manage and limit the amount of risk you are going to take. Now there are simple but super effective things you can do to prevent great loss. 1. Set a stop loss based on your risk tolerance. Think about how much money you're okay to lose on one single trade and not panic. I don't care if it's 3, 5 or 10%. Always set a stop loss and stick to it. 2. Don't put all of your money into one single trade. Always allocate a small portion of the total amount you have saved up to invest and then bring it little by little into each trade. Diversify your portfolio to hedge your potential loss. If you buy Bitcoin, buy some gold as well. If you buy S&P index, explore something like bonds so you can hedge your potential loss. Always look for markets that have little to none correlation. And one last thing, do not borrow extra margin to risk in a volatile market like crypto, because with one margin call and you're in a lifelong debt. The second biggest mistake I see many young, inexperienced traders make is ignoring macroeconomic factors. A lot of young traders learn about technical analysis very fast and they think they can predict every market movement with some lines and indicators. You have to understand macroeconomic concepts like inflation rate, Fed interest rate, unemployment rate, PMI, CPI, PPI, and many more crucial data that basically control the flow of money in and out of every market. Learning these metrics and how to interpret them is 10 times harder than any technical, on-chain, or fundamental analysis. But once you recognize how to put the pieces of a puzzle together, your trading skills will become 100 times better. Now the third brutal mistake I see ambitious traders make is day trading. Day trading is more like a joyful dream rather than a reality. I don't care what other internet gurus told you, but in my 5 years of experience in financial markets, I haven't seen a single, and I repeat, not even a single trader who made sustainable income and long-term profit from day trading. And the reason behind this is not their trading strategy or faulty analysis. Most of the time the analysis is right, but the poor execution and decision making results in loss. So instead of wasting your time and money paying fees in exchanges and brokers, focus on a long-term trend and the big picture. You will see market's generosity against patience. I also made a video about finding Bitcoin's tops and bottoms so you don't day trade or overtrade. Seeing this helps you buy Bitcoin when it's undervalued, stay invested during the bull run, and cash out with maximum profit. So check that one after this. The fourth error we're going to talk about is emotional trading. Emotional trading happens when you let your feelings take over control instead of your logic. Two best examples we see on a daily basis in crypto market is FOMO and FUD. FOMO, or fear of missing out, happens when the market is green. People are talking about going all in some random meme coin, and basically good news floats all around the market. Suddenly we feel left behind, and there is this sudden urge to buy an asset without proper analysis. On the other side of the spectrum, we have FUD, or fear, uncertainty, and doubt. We get this feeling when the market is crashing and our hard-earned money is shrinking more and more.
What in the world is happening on Wall Street?
Two-year note yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
Then we start a sell-off to avoid any more loss. These feelings are okay, but they don't belong to the financial markets. So now you want to know how to avoid this? The answer is simple. 1. Upgrade your analyzing skills so you have a solid logical reason to get in and out of every single trade. Make a custom trading plan, and finally stick to the plan no matter what. If you do this every time you want to make a trade, you won't get affected by news and other people's thoughts and feelings. You can also use the fear and greed index that I talk about almost in every single video I make, and do exactly the opposite of what other people are doing. We covered 4 blunders already, but the next 3 are even more important. If I had to choose one mistake that resonates with my personal trading experience, I would definitely choose chasing losses. Let me tell you a quick story. Last year, I lost Bitcoin bull run from 32 to 48k. And that felt really bad, so I wanted to make it up by betting on the market's next trend. I thought Bitcoin could not move any higher because of 2 reasons. The first one was contractionary acts of Federal Reserve, like rising rates to multi-year high of 5.5% to slow down inflation and consumer spending. The second one was markets front-running and buying the hype of Bitcoin ETFs and having together. I decided to go shorts on futures market, and unfortunately I was wrong. The inflows into Bitcoin ETFs were much higher than what I initially thought, and it ultimately ended with my position hitting its stop loss. You see, I tried to recover a loss by chasing it, and obviously it didn't work out well. So please, accept your loss, move on, and look for new opportunities. Now let me tell you what happens if you don't learn from making these mistakes. You'll do it again. That's why the 6th mistake that traders make on their trading journey is not learning from them. You know what I did after losing on that Bitcoin short position? I started looking for the cause. I found out there were several faults in my analysis. I underestimated the inflows into Bitcoin ETFs. I didn't see the hype for Bitcoin halving, and I didn't analyze the on-chain and technical data correctly. And all of this led to me finding a great position on ETH before the Dencon update. I managed my risk, I saw the growth potential, I set my stop loss, and in about 2 to 3 months period, I gained crazy profit and recovered all I've lost on that Bitcoin short position. If you found this video helpful, please make sure you like it and subscribe to my channel so others can see this kind of content as well. Also, ring the notification bell to be notified every time I upload just for you. The last fatal error I have seen many traders make is lack of consistency, and it goes into all different aspects of investing. You have to be willing to put in the hours, research, watch videos, read the news, analyze on-chain and technical data, learn about fundamentals, and you have to be willing to do that every single day. We are trading in a market that constantly renovates itself, and something you knew 6 months ago might not be valid today. So focus on learning and perfecting your skill on a daily basis. You might miss one bull run, doesn't matter. You might lose money when the market crashes hard, doesn't matter. Find out what you did or did not do that led to the result that you didn't want. Try to be better next time, and soon you will realize you are better than 90% of traders. So we covered 7 deadly mistakes beginner traders do that makes them quit trading or lose a lot of money. And by avoiding this, I can guarantee you will do so much better in the long run. Also comment down below which of these mistakes you have done and what did you learn from the process, so other traders can use your experience as well. Thank you for being with me today. See you in the next one.